The judge of the U.S. Bankruptcy Court for Michigan's Eastern District ruled that Detroit was eligible for Chapter 9 protection. I am here today with John Miller, who's the co-head of fixed income at Nuveen Investments, to talk about municipal bonds. John, thanks so much for being in.
Thank you for having me.
So, John, right now you're saying that municipal bonds are an attractive investment, but a lot of people who are maybe unfamiliar with the space, they hear Detroit and they think, why would anyone say that?
Well, first of all, I think Detroit needs to be put into its proper context. It's a large city, but it doesn't have a lot of uninsured municipal GO debt outstanding. It's relatively moderate for the scope and scale of this marketplace. It's $3.75 trillion marketplace, 65,000 different issuers. Most of those issuers are actually doing fairly well, benefiting from the economic recovery. State revenues are setting all-time new record highs, for example. And defaults are actually falling, not rising overall.
Yeah, why are we seeing defaults? They're down this year against last year. Why is that?
A couple different things. First of all, as I mentioned, revenues are up because the economy is improving. Additionally, municipalities have not been issuing a significant amount of debt, so they're not growing their overall level of indebtedness broadly. It's actually shrinking slightly. And also the property markets are improving, the real estate markets are improving, and that generates more property tax revenues for municipalities, collecting a lot of those.
So some people are going to say, why would I want to get into municipal bonds when the S&P's up over 25% this year? I should stay in stocks.
Understood. I think that a couple different things. First of all, it's positive for a total portfolio to have multiple asset classes that do not move in lockstep with each other. So this year, stocks are up a lot, municipal bonds are down a little bit. In other years, when stocks are down, munis sometimes do quite well. It's worth an asset allocation. In addition, tax-exempt income is a key driver of returns and a key driver of demand for municipal bonds over long time periods. Taxes, broadly speaking, are up on the federal and state level, and Medicare taxes are also increasing, affecting investment income.
Sure.
Municipals are exempt from all of those, so taxable equivalent yields actually go up in that scenario.
So, John, give me the bottom line on this.
I think the bottom line is some of the positive trends, higher revenues, lower levels of debt, are being obscured in the municipal bond market by the focus on Detroit. That has made muni bonds cheaper. They're cheaper even though inflation is down. That should be positive for munis. And taxes, broadly speaking, are up, which also historically is very positive for munis. I think these trends will ultimately get recognized by market participants and will come back into play over time, temporarily obscured by the Detroit story.
Well, John, maybe you're giving everybody else a chance to get in before the rest of the market participants figure it out. Thanks so much for being here with us.
Thank you for having me.
For The Street, I'm Joe Deaux.